In today's video, I will show you how to create a portfolio of stock picking strategies that you can then deploy to your AlgoCloud demo account. And why trade a portfolio and not just one strategy? That's easy. You don't go to war with one soldier either. A portfolio allows you to react to a variety of market situations where strategies complement and balance each other, ensuring the best possible results. There are 4 parts to portfolio building and evaluation. First, selecting appropriate strategies. In this demonstration, I will be working with a portfolio of 3 strategies. Second, loading the strategies into Portfolio Composer, which is a feature of Strategy Quant that allows you to create the most optimal portfolio setup when set up correctly. In the third part, we will focus on important metrics. And in part 4, we will focus on maximizing our profits. The very last step is then deploying the portfolio to AlgoCloud, but you already know that. And if you still need a refresher, check out the previous video where I describe signing up to AlgoCloud, connecting your broker, and deploying your strategies. Now let's take a look at preparing the strategies. For simplicity in the beginning, I recommend choosing 3 strategies the same way I did. And in the same way you evaluated one strategy in Custom Project RSI Radar, prepare a total of 3 strategies. For real trading, it is then advisable to choose strategies that have different logics, like Christos described in the interview. In order to use these 3 strategies in one portfolio, we need to upload and set them up in AlgoCloud, where we will then download them and use them in Portfolio Composer and Strategy Quant. Log into your account of AlgoCloud and open Algo Editor. Load the first strategy using the Load button. In the Settings tab, go to Money Management and set Risk Fixed Percentage of Account to 100. In the Data tab, set the start date to 1st of January 2005. And of course, run the backtest. Then save the strategy to your disk. Click on the floppy icon and this time select Save to File. Now, simply load the next strategy using the Files and Load from File button. We are setting up the same things again. First, money management to 100% and the start date of the data to 1st of January 2005. And then just repeat the same for the third strategy. I guess you have noticed that we did not address leverage or margin. In today's video, for clarity, I don't use leverage at all, but leverage is usually available in stocks up to 3 times, which can then roll it triple your profits, but of course, also your risk. If you are a newbie and you are starting with trading, we do not recommend to use leverage, but of course, you can start using the leverage at any time in the future. If we don't use leverage, there is one benefit though. We don't pay any swap fees when we hold it. Coupled with a well-chosen broker that has 0 fees for opening a trade, this significantly reduces the cost of the trade, and with that, the profit potential increases. Now, step 2. Navigate to Strategy Quant and go to the Portfolio Composer section. Use the Load button and load all 3 strategies. Next to the Portfolio Composition tab, you will find the Configuration, Account and Money Management, where we select Full Available Data Range, which includes exactly the range we have set up for the strategies. and the money management that is used is described below. Now mark all 3 strategies and click on Recompute Portfolio. Now, in the right-hand side of the equity curve window, turn on Benchmark and Time mode, which is, by the way, a great feature that allows you to instantly see the trend and performance of the index itself versus your portfolio of strategies at any given time. It's simply a comparison between buying and holding SPY versus trading a portfolio of stock picking strategies. The comparison results is clearly displayed in this table, where you can see the results of each portfolio value and immediately next to the SPY results. Step 3. In the results, it's definitely worth focusing on Sharpe ratio, CAGR, and absolutely critical, as you can see, is drawdown. The annual percentage appreciation is clearly shown in the Overview tab, where you will find, among other things, also exposure, that is, what percentage of the time the portfolio was or is in the market. In the top left corner is a data drop-down list where you can choose whether you want to see results for individual strategies in the portfolio or the entire portfolio. Similarly, you can compare results graphically in the equity chart section. Now, step 4. You will have noticed that for the strategies we have uploaded to Portfolio Composer, there is a weight column. To explain this to you in very simple terms, I will turn off one of the strategies. I simply uncheck it. Now, if we wanted both strategies to always trade, we would assign a weight of 50% to each strategy. This would evenly distribute 100% of the capital between the 2 strategies. I set it, I click on Recompute Portfolio, and I wait for the result. And obviously, with this setup, the portfolio would have much less performance, which makes sense because when I look in the Overview tab to see which strategy spends how much time in the market, I see that the second strategy is in the market many times less time, but we have allocated as much capital to it as the first strategy, which is in the market almost 70% of the time. I will now rebalance the weights back to 100% for both strategies. Again, recompute portfolio and wait for the results. At some points, there will not be enough capital for strategy B or the second strategy because the strategy, let's call it strategy A, has fully open positions and vice versa, but overall profits will increase without having to raise capital. In this way, we can increase the return regardless of account size. I highly recommend spending more time with this functionality to kind of examine in more detail the behavior of each strategy and the entire portfolio under different settings and weights. Now, all you have to do is deploy the strategies to your AlgoCloud demo account. The process is exactly the same as I showed you in the previous lesson. However, be careful when setting up the money management afterwards before the actual deployment. If you have simulated a portfolio of 3 strategies in Portfolio Composer where all strategies had a weight of 100%, the money management settings will be the same for each strategy. You always choose risk fixed percent at 100%. However, if you have found a different, more optimal weighting distribution in Portfolio Composer, let's say 100%, 50%, and 30%, and you are happy with the result, you want to get as close to live trading as possible, you need to adjust the strategy's risk fixed percent in the money management to the appropriate values before deploying them. Thus, for strategy A, you set 100, for strategy B, 50%, and for strategy C, you set 30%. Setting up and building an entire portfolio can be a very complex matter. For example, strategies should be complementary or have low correlation. However, these are already quite advanced setups that you can look forward to in the bonus lessons. Trader Christos speaks excellently about this topic, and we have prepared an interview with him, which you can find in a link below this video. And that's all for today. We look forward to your feedback, and I will see you in the next lesson.